Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Prices during late April and May pushed up through some pretty significant congestion dating from September 2012 between 513 and 3/4 to 519 and a half. Despite the outside weak pattern made 2 weeks ago, a pattern that is the lesser cousin to the key reversal. Now, despite this pattern, the market tried to move even higher, but ran into a roadblock at the March 23 high at 540 and 3/4, and dropped off until this week when we have seen a small gap-filling recovery. But this has been halted so far by another roadblock, or should I say, a couple of roadblocks. The first and possibly the most significant is the bright red neckline extension above, currently 525 and 3/4 of the April to August 2024 head and shoulders top. A neckline that throughout mid-late May to early June the market was trying to make into a base of action. The second, and to a lesser degree, is the July 23 high at 526 and a half, something I also pointed out 2 weeks ago. This now brings me to a point I spoke about 2 weeks ago, which has not come about. It's not come about. You see, I said back then, I quote, "This move higher started 3 weeks ago," so that's now 5 weeks ago, "and has been enough to see the start of the second leg for a large bullish half hesitation, a pattern I had put forward as an idea back then." Thus, the question I had back then is, from where do I measure this bullish half hesitation? Is it from the changeover gap higher at the start of March, or from the changeover move in early February? I had thought about this and I decided to look at both. Thus, for the March move, we had a primary target up in the 507 and a half area, and a harder secondary target up in the 521 and a half area. Interestingly, both targets for this pattern have been achieved. For the February move, we had a primary target also in the 521 and a half area, so already achieved, but we still have open a much harder to reach secondary target X up in the 544 and 3/4 area. I'll be interested to see if prices can manage to reach target X. I should point out one further item from this bullish pitchfork, that it is a no what if. There is no what if fallback scenario here. There is no possibility for this dark blue bullish Andrews pitchfork to become a shallower bullish shift pitchfork. So is this pattern or something else? End of quote. So watch this space. Sorry, and that's the end of the quote there, sorry. Well, that is quite a long and detailed quote to digest, but I wanted you to see that I sometimes do not see the whole picture, and I readily own up to it when it happens. This leaves me with two final points to discuss. First is that we have some congestion support below the market from the rising green short medium moving average, it's currently at 518 and a half, along with other congestion from September 12 between 513 and a half, 513 and 3/4 to 519 and a half. Now, I'm still somewhat dubious about this congestion, though not so much about the second point, and that is the opportunity for a monthly key reversal here in June. Thus, with only a few days left to go, if we close on Tuesday next week either over 529 and a half or under 520 and 3/4, then we would be on. Anything in between and we'd have a lesser outside month pattern. And right now, well, we are looking at an outside month pattern. Winnipeg Canola. There had been a number of patterns developed here with some direct influence on the market, some not so much, but we've ended up with originally only 3 showing the way, and now we are down to just 1. We had 2 larger and long-term patterns and 1 more recent derived pattern. The first longer-term pattern I talked about 8 weeks ago was, and I quote, an early February to date bullish half hesitation, and possibly a late December 25 to date bullish half hesitation. Thus, for the former, I'd have a primary target X up in the 773 area, and a secondary harder to reach target X1 up in the 815.60 area. For the latter pattern, it would give a primary target X2 up in the 810-60 area and a secondary much harder to reach target X3 up in the 877-70 area. Be interested to see how these patterns develop and whether the market will hold with the February based pattern or try for the harder December 2025 based pattern. And that's the end of the quote. The first, primary target X at 773 even, and the alternate primary target X1 at 815.60 have already been reached. We came awfully close to the prior secondary target X1 up at 815.60, but didn't quite manage it, despite a weekly key reversal up seen 4 weeks ago, a pattern that I'd warned about. With a move lower, both the secondary targets are no longer viable and will be retired after this commentary. However, the second long-term pattern here, and as I said 2 weeks ago, and I quote, the more important one here, end of quote, is still valid. I spoke about it 17 weeks ago when I said, and I quote, I've also drawn in the meantime a March to December 2025 bullish Andrews pitchhawk. And I think the middle time, which is currently 833.40, I think this middle time may become important, end of quote. This pitchhawk, now highlighted in bright pink on my daily chart, has so far not had any tines. Even now, no tines have been tested. However, even now, I still think this pattern is very important for now and in the future. So please keep it in mind and keep a watch on that bright pink middle tine above. The final and recent pattern was a finessing of the original bullish Andrews pitchhawk I spoke about 3 weeks ago for the mid-April to mid-May action into a shallower dark blue bullish shift pitchhawk, which seemed back then to show the very recent bullish angle of attack. Well, this is no longer true, and I'll retire this pattern after this commentary. So what does this move down left us with? Well, we have 3 things. First, we are obviously using the rising mauve medium moving average below as a support, temporary or otherwise, and that's currently at 733.5. Secondly, overhead, we now have again a combination of resistances made up from the almost flatlining green short medium moving average, currently 751.80, and the more important I think, 38.2% absolute Fibonacci line at 750.10. The third factor is one common in Chicago soybean oil and in Paris rapeseed, and that is we are set up with only a few days left to go for a monthly key reversal here for June. Thus, if we close on Tuesday next week either over 772.70 or under 763.80, then we would be on. Anything in between will have a lesser outside month pattern. Right now we are looking quite clearly at a monthly key reversal down, so watch this space. Bursa Malaysia crude palm oil. To start with, as I've done here for most of last year, now into 2026, I'd recognise the wide congestion area that was overhead, but which became a support, then a big congestion, and now edging into becoming a support once again, between 44.08 to 45.59. Prices had, since late March, been up over it by one attempt. One failed attempt lower, that is. Mid-April, that was, finally punching down through the way through it 6 weeks ago, but could not sustain the move lower with an original gapping action higher, changeover or otherwise, that topped out for a second time 5 weeks ago. Dropped down and 4 weeks ago gapped higher once again, only to top out and in the process fill in some gaps, but still leave the big one from early March down below still open. However, the market was not done yet with this heartbeat movement of up and down, up and down, up and down. As early last week, prices bounced up from the rising mauve short medium moving average, currently 44.37, and this week pushed higher still up through the bright green upper downtrend, currently at 46.41. That was also the upper bear channel line and a bright green April to date shallow bear channel, currently 43.05 to 46.01. Even this piercing could not be sustained with no closes over the bright green upper bear channel line, though I have to say since mid-May we have seen rising lows, a sign of a bullish incentive even if the top side has been limited. This all came down to the same question here I've been asking for the past 6 weeks, and I quote, the question is the same as elsewhere in the veg oils and oilseeds. With the cap higher and significant supports below, is this market forming a topping action or is it some form of bullish halfway hesitation? Whereas elsewhere the markets have seemingly embraced the bullish incentive and gone to try higher, here it is not so obvious, and indeed is not obvious if we are forming either a topping action or a bullish halfway hesitation. End of quote. All this has left us with here is a 4408 to 4559 congestion, and a pattern I drew 4 weeks ago of a mid-April 26 to date, very shallow, bright green, quite shallow bare channel. And with last week's peaks we have seemingly legitimised this pattern yet again. I would only add something I spoke about 2 weeks ago when I said, and I quote, "So this is the current pattern here. That is driving this market, and I would watch this one very carefully for the next direction. However, just be aware of the possibility of false breaks, which given what we have created, could be quite high." End of quote. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.